Could a single Supreme Court ruling wipe out billions in government revenue and shake the gold market, bonds, and dollar at the same time? That's the crossroads we are at right now. Hey all, welcome to ShareTreck, where science meets investments, and I'm your host Raj. Friends, today we are diving into US Treasury debt management, the surge in tariff revenues, the Supreme Court challenge to Trump-era tariffs, and what all this means for financial markets, gold prices, and Federal Reserve policy. Stick with me, because by the end you will see how these moving parts connect and why investors are worried that Washington may be losing control. Let's start with debt buybacks and Treasury bill issuance. In 2025, the US Treasury restarted its buyback program to smooth debt maturities and boost market liquidity. In May, it pulled off a $20 billion buyback, which is the biggest since the early 2000s, and is now running weekly operations of $2 to $4 billion in 20 to 30-year bonds. At the same time, Treasury is issuing a heavy volume of short-term T-bills with a clear target, keeping them around 20% of all marketable debt. The 20% level acts like a shock absorber for seasonal borrowing spikes. Now here is why this matters. These aren't simple swaps. Buybacks and bill issuance are separate levers in a bigger strategy to keep borrowing costs manageable without letting debt structure tilt too far, short or long. And remember, banks and primary dealers join these auctions voluntarily. They are not forced buyers. That's the important context for how real demand gets tested in the market. Now let's turn to tariffs, because this is where fiscal politics and market mechanics collide. Since 2025, Trump administration tariffs have been pulling in tens of billions of dollars every month. Some people assume this cash is being earmarked for buybacks and debt paydown. In reality, it isn't. Tariff revenue just flows into the general federal budget. But here's the catch. With another debt ceiling standoff coming, this extra revenue gives the Treasury a little more breathing room. Think of it like plugging leaks in a boat. It doesn't fix the bigger problem, but it slows down the water from rushing in. So, tariffs don't fund buybacks directly, but they do ease near-term borrowing needs, and that could buy Washington a few months of political maneuvering before the debt ceiling drama hits full swing. For a detailed breakdown of how these moving parts fit together, check out our long-form video. Link is in the description and pinned comment. And if you want to stay ahead of stories that connect politics, policy, and your portfolio, hit the subscribe button and join us here at ShareTreck. Bye for now.